Everything you need to know about products and services that can improve your life. This is Experts on Call on CIL 650.
You're listening to QuayPacificStrataLife on CIL 650, and I'm Tony Giavento, your host, and Adrian Murray, a lawyer with Hammerberg and Associates, and Gordon Lee, insurance broker from CMW Insurance, are with us in the studio. We're talking about insurance. We've just had a nice little discussion, actually, about some of the pitfalls and changes that happen with misunderstandings around Bearland stratas, and there's certainly plenty of them. And I think there are a lot of misunderstandings also in building stratas. So townhouse complexes, and we certainly historically have had some disputes in the courts around this and claims where people move in and they just assume that I'm in a building, the strata has insurance, so everything must be covered. So Gord, let's talk a little bit about the different types of insurance. So we're going down the Act. We know what has to be from the Act, what has to be insured, and what the strata has to deal with. But let's talk about the first thing. One of the things the Act says is full replacement value. So how does a strata know that they are actually insuring for everything for full replacement value?
Most of the industry, with a strata, I guess, you must replace for replacement value, and doesn't go beyond like how do you obtain that, right? But most of the industry has basically accepted and adopted that they get a professional appraisal done by an appraisal company, and usually those appraisals they pay for it, and it's usually on a 3-year or 4-year contract. Appraiser goes out, looks at the strata plan, looks at usually a unit or two. Determines a replacement value, and then they do updates every for the next year or two or up to 3 years, and then they go back and do the same thing to make sure that is what the current replacement market value is if it had to be reconstructed.
So Adrian, you were telling us about the Act and with respects to fixtures. It's fine to use a word like fixtures, but how broad does that cover? Let's take a 50-unit apartment building that's just opened. What does fixtures really include?
Well, fixtures is actually defined in the regulations, and what we're talking about are fixtures built or installed in a strata lot. So when we think about a building, we think about the bare walls, then we're looking at basically everything that's attached inside it. We're looking at the kitchen cupboards and the counter and the bathroom sinks and the carpeting and any wall coverings that there might be, any light fixtures. So it's the full sort of what you would expect, everything that's attached. And fixtures is generally an understood term in real estate anyway. That it's attached, things that you can't take with you without or remove without causing damage.
Right.
So the key in the definition, however, is that it's fixtures installed by the developer.
Right.
So that's the area that I find most owners misunderstand. They come into a unit, it's got lovely hardwood floors, they're maybe the second, third owner, it has hardwood floors. That's the way they bought it. What they didn't understand was that was not a fixture installed by the developer, that in fact the developer installed carpet, and that a subsequent owner installed hardwood. They've now bought it, but the hardwood is not insured because it's not a fixture installed by the developer. So one of the most important things for every buyer of a strata lot when they're buying from other than the developer is to ask and understand what's been changed in this unit, what's not a fixture. That was installed by the developer, because it won't be insured. They will need to have their own insurance. That's the real key.
But this could be really a big thing in a new development, for example, a new high-rise building complex where developer incentives as upgrades to buy units are used. So when you buy your unit, you might buy a bare unit. You might also buy a unit that came with that the developer said, well, look, I'll sell you this unit, but we'll include with it hardwood flooring throughout the unit.
And if that's the case, I think then that's developer installed. Mm-hmm. What you want to do is you want to have a record of that.
Right.
You want to have it in your contract, which you normally would. Hopefully you would. And so you've got a record that this unit came with hardwood floors. And if it was an option that the developer was offering at the time of construction, again, that's generally known. Mm-hmm. Some units come with carpet, some units come with hardwood. So those are the kind of things that are understood. I think the beauty of it, and Gord can correct me if I'm wrong, but it's my understanding that as a buyer, as an owner of a strata lot, I may not know exactly what the betterments are, But when I go to my own insurance company and I say, I've just bought a strata lot, I want coverage, I want to have deductible coverage, I want to have coverage for betterments, the insurance company isn't going to say, well, list the benefits. They're going to give me a package that will cover whatever betterments there are.
Correct. And usually, because when you buy those, you're going to have a content limit. So they'll ask you first things, how much contents you have for replacement. And usually for the betterments, you get 50% of that. So if you say, it's about 40,000 to replace my contents, most companies say, you can automatically, as a package, 20% for improvements, betterments, whether you have it or not. And that's a beauty of these policies. A lot of unit owners going and don't know the details of that. They don't specialize in insurance, and even with the broker asking them that question, they said, well, I just bought the unit. I'm not exactly sure what's the original or not. So on that case, if you get that insurance, you're pretty well, I would say, relatively pretty safe, because unless the building's really old and there's huge amounts of upgrade done. Right. But the basic is still covered by the strata insurance. So if people upgraded cabinets, the basic cabinet, that is still by the strata. The great difference is what their own insurance would cover.
So your homeowner policy is your security blanket, actually.
Yes.
Right. So if there are gaps in the strata's policy, the ideal is to have your homeowner policy cover those gaps so that no one's exposed to those extensive losses.
Yeah, it protects the beyond that. Sometimes it's like we have situations where on older buildings, the adjuster will ask us, do you know, the unit owner is claiming the flooring's original. The property manager, he's not sure because the building's now built in the 70s, so many changes. We're trying to ask council members who's lived there for, but they're not sure because most people haven't changed over, and who's paying for what. If there's insurance in place, we'll let the insurance company sort it out. Without insurance, where we get into problems, the unit owners kind of say, well, I think this is original, should be covered. And when someone says it's not, well, that becomes, of course, a huge problem.
So we've got fixtures. We have full replacement value. What are we actually insuring for? What kind of losses? They're called perils.
Well, this day and age, the policies are what we call all risk policies. So they don't name the perils. Really, what they do is they say it's insured for all perils except the exclusions. For most people, when I tell them that, they go, "Oh, that's pretty tricky. That's typical insurance jargon, is saying that you're not going to insure all these things." It's not. It is actually, it's broad, because if you just name the basic thing, so a typical thing we'll have is that someone will call us, says, I'm a unit owner, I got your certificate. It doesn't say fire anywhere on the insurance, and really, I'm really concerned. And we try to explain to them, because the all risk policy doesn't exclude for fire, doesn't exclude for water damage, doesn't exclude for smoke, explosion, and even for human error. People overflow a tub. There's no exclusion, say if you overflow a tub by accident, it's not covered.
Right.
So it's pretty broad, but in general, to explain to people, it's going to be fire, lightning, explosion, water damage, which is a common problem in stratas, right?
Right.
Smoke damage, vandalism.
Right.
Theft.
And the Act also includes things like which have occurred impact by aircraft.
Impact by aircraft.
Right.
Things that hasn't happened, earthquake.
Right.
Major floods, which has happened in other cities, municipalities.
Right. But earthquake is not mandatory under the Act, right? It's an optional insurance. I don't know I would ever own property without having earthquake insurance in British Columbia. It's absolutely essential for everyone to contemplate. But earthquake has different dynamics to it, of course, because we live in a high seismic zone.
Yes. Yes. It's interesting, that is not part of Act, but I have not seen a policy myself yet that doesn't have earthquake coverage.
Right. We have
Okay.
policies that are on the outer coast area. The Strata Corporation specifically have to ask for earthquake insurance. Otherwise, they tend not to be included because it is such an extremely high risk zone. What if there's an error in placing the insurance?
Well,
I guess it's kind of a generic question.
Yes.
Maybe it needs to be more specific. What if the building or the property is not insured for the full replacement value?
Well, there's a few things I guess we're gonna have to look at is where the error is made, right? So I think from that perspective, if the information is provided, say if it's the appraisal company that provides the wrong information,
right,
then that becomes a problem of legally with the appraisal company. We do have some extra coverages in our policies that kind of try to compensate for that. So we give a little bit of extra coverage, like a extended replacement cost that provides a little bit excess in there in case that the appraisal is slightly off.
Right.
Also, once you have an appraisal, most policies will remove what they call a 90% co-insurance. It becomes a stated amount. So in other words, if you have a partial loss, even if the value is a little bit below, the actual replacement is a little bit low, there's no penalty in that partial loss is paid out. If it's on a broker side, then the broker will have to look after it either with the insurance company or possibly even all brokers would have a errors and omissions coverage.
Right.
So, if it's a large loss where the brokerage itself cannot look at that financially, they would have to make a claim on the errors and omissions policy to make sure that, the client's looked after.
So it's kind of entertaining, insurance covering insurance at some point, isn't it? But for everyone, it's part of their security blanket.
But you raise an interesting point, because you say if the appraisal is wrong, what if the strata refuses to get an appraisal? Because I have encountered stratas who believe that the cost of an appraisal is an unnecessary expense, and then obviously the potential is that they're underinsured, perhaps even dramatically underinsured. How often does that arise?
The percentage is pretty low these days. Where we get the most resistance probably is a smaller strata that's built by developer, and happens the developer also resides in that. And they says, well, so we'll say, you generally need an appraisal. They go, well, we built this building, so basically I know how much it costs to replace. I really don't think we need an appraisal. And we'll say, well, the act says, you need to replace a replacement, and most of the industry accepts it as an appraisal because, well, your act doesn't say it needs an appraisal. I don't disagree with that. So they would go ahead and do it. So we try very hard, and we also will tell them, if you're going to do replacement, I know this is your construction cost, because in some cases we've done the construction insurance, but we'll say, I don't think you would bill for costs for other people. Like, say if I asked you to build a strata complex for me, we do for costs. So we try to get those limits up properly. But we also warn them there is a potential for errors and omissions, which, if they make those decisions in a self-managed, other unit owners can take legal action against you. So,
right.
For the small costs, I really think that, you should get the appraisal.
Well, and I don't think anyone is going to insure you for deciding that you don't want to insure for yourself properly. Right?
That becomes an issue over time.
Right.
Within a year, sometimes the insurance company will overlook it, but after a while they'll follow up and say, why is there no appraisal?
But that's also an exclusion, right? If we're underinsured and the claim does not cover the entire cost or loss of damages, you can't insure for that underinsurance.
Your directors and officers insurance isn't going to cover you.
It doesn't cover you, right? So you're
lack of insurance.
Yeah. So you, as the strata council members, or you as the owners, you're going to be out on the limb for this, and that's one of the reasons why appraisals are so important, to ensure that you don't have that risk exposed to your council members and to the people who are serving your strata corporation.
Yeah.
You're listening to QuayPacific's Strata Life on Experts on Call on 650 CIL, and we'll be right back after these messages.
This is Experts on Call on CIL 650.